Good morning, everyone. I'm Barbara with Thread. Thanks so much for joining us today. We're going to start off with more than a few slides from Lori Winters, our CEO, and Matt Mitcham, our COO. And then we'll open the floor if there's any questions. Probably only have time for a few today. Just note you are on mute, but you can chat your questions into the bottom right-hand corner of the screen. Questions are in moderated mode to protect your privacy. In the top right corner of the screen, you will see the event board. There you can find our slides and resources from today's event. We also put the slides in full screen since some of the information is kind of small. There are also dialing instructions there if you have any trouble with the audio. We do recommend Google Chrome as the best browser for this. Within 24 hours, you will receive a follow-up email linking to the recording and the slides from today. If you have any questions, please don't hesitate to reach out to me at marketing@threadhcm.com. And with that, I'll turn it over to Lori.
Awesome. Thank you, Barb. Welcome, everybody. Thank you for attending. Our goal here today is to try to get as clear as possible on how to run the PPP Forgiveness Report out of iSolved. So today, our audience is clients only, and we want to try to walk you through this. And I know that we'll be able to answer some questions, and hopefully we're going to clarify some things. And after today, we're going to make sure that you guys have access to this report. But there are some things that are still changing, and we'll address those in a few minutes. But I just want to make sure that everybody knows that this is a work in progress, but we want to make sure that you have the tools needed to go ahead and start working toward your forgiveness application. So our agenda today, we're going to go through some of the recent changes. I'm going to blow through those because we've done that a bunch of times. We're going to show you where to find the forgiveness report, some of the overview of the report options. We're going to go through an example and talk about a little bit about future changes and do a little Q&A if we have time at the end. Always know that we're here for you guys to work one-on-one, and some of you are going to definitely need that probably. All right. So I just want to quickly, obviously this is based on current guidance. It's ever changing. I'm having to dust off my calculus books and try to keep myself in the loop on how to do this stuff. It's not simple, but we're hoping that this report makes everything a lot more simple for you guys when you're applying for the forgiveness. Some of it's based on our interpretation, so always seek advice from other professionals. All right, everybody knows, I think by now, that the PPP Extension Act was passed. I want to highlight just to make sure everybody knows that the extension to the covered period moved from, well, you have an option, 8 or 24 weeks. They expanded how much you can spend on non-payroll related applicable expenses to 40%. So you only have to spend 60% on payroll or more. You have an extension to FTE, full-time equivalent restoration, from June 30th through to the end of the year. In some cases, if you got your loan, so in all cases, if you got the loan after this was passed, you immediately get the 5-year loan payback. If you got the loan before that, then you still have the 2-year loan payback, but you can talk to your lender. In a lot of cases, I think they may make changes to that. And then there's some exceptions or exemptions on FTE count based on some hiring issues that a lot of companies have had. And then there's a new easy form for those that had no reduction in wages or headcount that makes this application for forgiveness very easy. So the new easy form is for specific purposes. If you're self-employed or have no employees, you automatically can use the easy form. If you had no drop in wages by more than 25% and did not drop your number of full-time employees, you can use the easy form. You can also use the easy form. I've had this question. If you had more than a $2 million loan, you can still use it as long as those conditions apply. If you experience reductions in business activity as a result of health directives related to COVID-19 and did not reduce salaries or wages by more than 25%, but your FTE count is down, you can also use this form. So hopefully a lot of people can use this easy form. It's a lot simpler, and we'll talk about that. Quickly, I just want to make sure everybody understands that You now have exemptions for your full-time equivalent count. If you made a written offer to rehire someone that you laid off, but they declined to come back, make sure this is in writing. If you made an offer to restore their hours and they declined to come back at those amount of hours, if an employee was fired for cause undocumented, that is going to be an exemption to full-time equivalent count. If an employee voluntarily resigned, that's also an exemption. And if they voluntarily requested a reduction in hours. So I know some clients out there have had this happen where people have asked for fewer hours and they don't want to work full-time anymore, and that's okay. It's not going to affect you negatively. So there's a lot of things around here that you can use these exemptions for. So I just wanted to quickly go through that. I know I've done this in other town halls, but I just want to make sure. So remember this, though, you have 10 months to apply for forgiveness. So make sure you give yourself plenty of time. There's no hurry, no rush to do this. You have plenty of time to do it. So just make sure you've done everything you can to get the full exemption. There are new changes coming to this report on Friday. And so there are going to be a few things that are going to change from what we're talking about today in the release coming this Friday. And I've already heard this from a lot of you, and I've heard it from lenders that I have relationships with, that a lot of them are not even accepting forgiveness applications yet. So don't stress out about that. That is coming. I have heard, I think, of one company that has been able to submit their application for forgiveness and got it and had it forgiven. So a lot of people are in the same boat. We're all waiting. We've had this question asked: can you apply for forgiveness before the end of the covered period? So say you have chosen the new 24-week covered period, can you apply before it's over? A borrower, and this is directly from the language, a borrower may submit a loan forgiveness application anytime on or before the maturity date of the loan, including before the end of the covered period, if the borrower has used all of the loan proceeds for which the borrower is requesting forgiveness. So you can apply anytime. But remember this: if the borrower applies for forgiveness before the end of the covered period and has reduced any employee's salaries or wages in excess of 25%, the borrower must account for the excess salary reduction for the full 8-week or 24-week period. So that is where you've got to be careful. You can apply for the forgiveness before that 24-week period is over, but you've got to whatever the reduction in wages over the 25%, you're going to have to multiply that by 24 weeks, not just say it was 12 weeks that you use the money. So that's a little bit of a important piece to understand, and we can help you through that. So I'm going to hand over for a few minutes. I'm going to hand over to Matt. And Matt is going to walk us through some of the system itself on running these reports.
Thanks, Lori. Absolutely. So we want to talk to, many of you might be, how do I even get access to this report? And so we want to talk through, go to the steps to do to make sure that you have access to it. We'll go through a couple of the options as well in the reports for you. And then obviously Lori's going to then round of how to actually read the report itself. So to get started real quick, I think this sign pretty much describes how everybody's probably feeling right now with this PPP. It seems like we're constantly getting conflicting information. Us no different. Our developers are constantly trying to write stuff. It changes. We're trying to hit a moving target. So just please keep that in mind as we're working through this. But the first thing we want to talk to is how do we enable it? So the first thing that we have to tell you is we need something from you before we can give this report available in your environment. And that is your loan origination date. So our team needs to know, when did those funds hit your account? You can ask your lender, you can go into your operating account and see when that date hit. But we need you to be able to email our team and us to set up that amount. And what's going to happen is when we do that, you can simply email your account managers with that date. Or if you're not sure who that is, you can simply just go to customercare@threadhcm.com. And as soon as you send us that date, we will be able to add that to your account, and then we'll enable the report so that when you go into your My Report section, you'll see a report over here called CARES PPP Loan Forgiveness Report. So again, just really want to stress, we need to know that date. So figure out what that is, because a lot of the calculations that these reports are based off uses that date. And so very, very important for us to get that. So that's kind of the first step to get going. So that'll answer a lot of the questions of why can't I see it and I don't have the report, because we need that from you. So once we have those two items, I want to walk through what a couple of the options are going to look like for you to in the report. So let's start. One of the first things that when you go to your report section in My Reports, you're going to see our familiar option tab that you see on a lot of the reports that you may run in our system. And so we're going to walk through line by line, each one, trying to explain it as best we can to help you understand a little bit of what's going on behind this report. So let's look at the first one, filtering. So many of you clients realize you have several FEINs with us. But the one thing that I can go ahead and tell you just to start it and make it easy is for probably about 85% of you clients are going to leave most of these defaults as blank. And the other 20% that we're going to talk about are maybe going to have some exceptions that we're going to help you guide you through. But one of the first things that you're going to do is it's going to ask you, what legal company are we trying to apply this for? So for most of you, you may only have one FEIN with us. You're going to leave that blank. But if for those that may have applied for multiple PPP loans because you may have multiple FEINs, that would be where you may want to run this report for each specific company, depending on how you applied for those loans. So we're simply going to leave that as blank on our first option. The next option that our system is going to give us is groupings. And again, I would just recommend leaving this default. But what this means when it has a pay group breakdown, so for some of us and some of our clients, you may have a group of your employees that are paid on a weekly schedule. And let's say maybe you have another group of employees that you pay on a semi-monthly schedule. All this is going to do is allow the report to break those two down to where you can see your weekly employees. And then you'll also be able to see your semi-monthly employees separately in this report. The next one is where the fun starts. So the covered period duration. So by now, many of you may be deciding, am I going to do the 8-week period and then apply for forgiveness? Or am I going to take advantage of the new 24-week period to basically spend that money? So we know for a lot of you, you're still waiting for your customer's return. You're having to kind of one arm behind your back right now. And so in this case, you're going to be able to choose very quickly. You can run the report on different scenarios. Because as Lori was mentioning, right now, a lot of our clients that are starting to run this report are using it just for more scenarios, trying to figure out what's going to be the most advantageous for them, for their company. So we're going to choose between 8 or 24 weeks. And that's going to be for anybody that may apply for that. And then the next one is going to be the weekly FTE hours threshold. So not to confuse you, but when this report was originally built, there was not very much clarification on what was considered a full-time equivalent. Was it 32 hours? Was it 40? We've gotten clarification from that now, and the default is 40 hours for the threshold. So again, we recommend you leave that blank. You don't need to touch that. We actually believe this may be a field that gets removed in a future release from our developers to help with any more confusion. That now we have the clarification that the 40 hours are the number. So for a very small subset of you, you may be a seasonal employer. But for most, I'd say 90%, 95% of our clients, you're going to leave this as blank because this is really going to be used for anybody that may have a different period for FTE calculation. Because they gave an example in one of the recent releases with the seasonal employers where it allows it to be a little bit more fair. So you can take advantage of this setting. So let's talk a little bit about the weekly, biweekly coverage options. So automatically, if you have a biweekly payroll or more frequently, so these are for our weekly and biweekly payers, this will typically be where you'll default to option 1. And option 1 is going to be the default, where it's going to basically say your alternate payroll covered period starting with a pay period beginning on or after the loan date. And really all that means is when the covered period came in, a lot of clients and a lot of companies where we can't spend this money this quickly, or we can't wait till this thing starts. And so this allows the alternate covered is when that next, when you got your loan distribution, let's say your loan distribution date was on April 20th. And then you got your next pay period starts on 4 days later. Allowing this report to choose option 1 would start that calculation on that 4 days later on your first start of your pay period. So again, on that option 1, we'd want to leave that as a default. Option 2 may seem a little confusing for you. We're actually just telling you to ignore it. We believe that's also something that may be filtered out in a future release as we continue to get more clarification. And then finally, for those that may have just kind of moved within the 8-week period, you can choose option 3 for your covered period. And that will literally just look at your loan origination date that you're going to give us to your account manager, and then count those 56 days. And the system will automatically prorate if it needs to between those calculations. So I know this stuff's confusing. I promise as our developers continue to get it, we will make this report a little bit more simple. And then finally, the monthly, semi-monthly coverage. So this is going to be for our semi-monthly payers and our monthly payers. And this is going to default to covered period. So this is going to make it really easy for you because you can't choose a different option. So you're going to leave that as a default as well. Now, another one that has created a little bit of confusion, we've got some questions around this, and we're advising you right now to just leave this as the default option. We believe some of these were some remnants of some options that were based on the original SBA guidance that we had, and so our developers were having to create basically every option they possibly can to account for that. So we're actually telling you to leave it as default because this report really allows you to be able to run a calculation of FTEs independently of the payroll costs. And part of that was back when we were trying to figure out what the FTE count and was it 40 hours. So again, simple, keep it default. You're seeing the theme here with a lot of these reports. So what we believe right now is for most of you, you'll be able to run this report and the data is going to look pretty good. But for the 20% of you where there's going to be more exceptions, we want to talk about some of the additional options that our team is probably going to need to help guide you through. So again, we recommend you run this report, you kind of look at the data, see how it looks. If everything looks great and you're seeing 100% forgiveness, go for it. But for some of those, I want to talk about a couple things that might need to happen, that you might need to customize the report if something looks off. And this is what we want to say is don't feel like you have to try to figure this out. We want you to reach out to us. We are here to help. Our account manager are here to help and guide through this. And so let's go through a couple of those potential exceptions. So the first one you've heard a lot around has been a lot of confusion around what about owners? Do they count towards FTE? Do they not? What happens? So iSolved has the ability and it already had this ability to track owners and ownership percentages. So for those that are going to add the owners to where you want to make sure that these are tagged in the report, you need to let your account manager know, and we will show you how to add the owners and make sure that they are tagged properly for this report. So simply, if you want to tell us if you've got 3 owners or 4 owners and each are 25%, if you want to let your account manager know, hey, here's the 4 owners and they're each 25%, we'll take care of tagging those for you in your environment. The next thing to consider is what Lori mentioned a little bit earlier is the SBA has allowed for a lot of full-time equivalent reduction exceptions. All of us are trying to get maximum forgiveness, and they are trying to make that easier and easier for us. So if any of these apply to you for potential reduction exceptions, we're going to want to make sure that we flag that employee that falls under one of these exceptions so that does not count against you. So in that case, if one of these apply to you, simply let your account manager know. And what's going to happen is we will create a couple extra fields in your setup to where you will be able to go and tag these employees that potentially are going to be part of the exception so that they do not show up on the report. And then obviously, therefore, give you a higher lane of forgiveness for the reports. So again, a lot of this stuff can be a little bit confusing, but we'll do a lot of the heavy lifting for you. You simply just let us know, and our team will take it from there. And then finally, if you're not asleep yet, a couple of things to look at as you're looking through these this data points. Obviously, there's about 30 or 40 different data fields that are being pulled, that are being calculated in this report. Now, and if there's 3 areas that we want to tell you to look at that Lori's going to talk to you about reading, but if you go to look at your wages and just something looks off, we want you to let us know, because the system determines a bunch of default calculations. So in this example, when we run this report, all your paid earnings, except for like 1099, third-party sick pay, some things that have been stipulated will not be included in that report. But we have the ability on our side to override or change in the accumulators for your wages. Same thing for health cost. Your defaults of your medical, pre-tax medical, all those memo calculations are set up. But if something looks off, let our team know, and we'll do that. And then the same thing for retirement cost. So those are just a couple things to exceptions. So just as a recap, most of the defaults are what you're going to want to leave on the report. If you have some of these exceptions as far as owners or potential FTE reductions, let our team know when you also when you're giving us that loan origination date, and then we'll take it from there and take you next steps. So with that, I'm going to turn it over to Lori to actually show you what this report looks like once you decide to run it.
All right. Thank you, Matt. This is fun stuff. So again, like Matt said, make sure that you reach out to your team at Thread, your support team, and we will help you get through some of this stuff. So you're not you're not totally alone on this, but we want to help you. I know I've talked to quite a few clients already one-on-one that have already been running these reports. They wanted them they wanted to run them early. They've been running them. A lot of you guys are really good with figuring a lot of the stuff out, but there are some things that we want to be able to put in there, making sure that if you've got employees, again, that are exceptions, FTE exception or exemptions, those are the important pieces that I don't want you trying to figure it out by yourself. I mean, manually figuring it out, because we can go do this in the system. Basically, this report can spit out everything you need for the forgiveness application as long as the data has been put in there. So this report contains 9 tabs. It is 9 tabs of data. There's a summary, the Schedule A piece, Worksheet Table 1 and 2, employee wage details, the 2 reference periods, well, actually 3 reference period options, February through June of 2019, seasonal, if that's what you're picking, and then January and February 2020. So the report's going to compare and see which option is best for you. The 2 that I'm not going to spend as much time on, but the employee wage details and the employee loan period details, this is if the data doesn't look correct to you and you want to go through and see exactly how it's calculating. So without further ado, I'm going to, well, I've got one more slide, sorry. Make sure we've added your loan origination date in the system. I know Matt already said that, but I've talked to some people, some of our clients, and they were having problems with the report because the loan origination date had not been put in. So we need to put that in for you. So make sure that you give us that date, and we'll put it in the system for you. Verify employee statuses. This is crucial. Make sure you have hours recorded for your salary employees, which should pretty much be the case, but if you've got anything that looks off, make sure you're checking employee statuses. And then the employee ownership piece, if you don't notate which employees are owners and what percentage, then it's going to not calculate this correctly, because as you know, owners are not included in the FTE count. So make sure that you go and mark those owners, and also, figuring out what the max, the cap of their compensation is. So you don't want to do it manually. Make sure we get this stuff put in the system, and always schedule time for us to help you walk through it. So you're not on your own here. Okay. When you open up this report, the very first thing that you're going to get is a summary tab. So instead of opening up and sharing an Excel spreadsheet with you, we just did screenshots from an actual report here. This is a very wide page right here. So I'm going to show you this in 2 slides, but this is basically showing you what your covered period, your loan period is, what your payrolls are included, the number of payrolls that are included in the loan period. And it's basically going to give you some information, just some overview information. The second part of it shows you what the best option is going to be highlighted, the best option based on the calculations it's doing in the background, what your best option is for your reference period. And in this case, it's the February through June 2019, but it also shows you the January, February. As you see, that FTE count was higher. It shows you what the average loan period FTE was. And in this case, you're getting 100% forgiveness based on head count. The second section down here shows what your wage reduction is going to be. This has a very, very small wage reduction of $445, but it's just this first page, this first tab is an overview. This is more information for you, and this is the Schedule A. So when you're filling out the actual application for forgiveness, there is a Schedule A you've got to fill out. Thankfully, This report, if it's set up correctly, will give you everything that you need for that, almost everything you need for that application of forgiveness. It gives you all the pieces out of the worksheets themselves, and I'm going to show you the worksheets in a second. But this is the Schedule A, where it pulls your cash compensation. It will show, it's your health insurance, it's schedule or your table 1 and 2 compensation, which is the over 100,000 and everybody else, your FTEs. So this is a really nice little summary or an exact amount or exact version of what you need to fill out your Schedule A in the application for forgiveness. The next thing you'll have to fill out, like if you're filling out the actual worksheets, tables 1 and 2, which you do have to fill out. Tables 1 and 2, here's an example of table 1. This is the people making under 100,000. So it's calculating for you all the cash compensation. It's calculating the average FTE. And it's also calculating for you the wage reduction amounts. So basically it's a copy and paste. You've got everything you need for the worksheet table 1. Now, if you've gone and made what Matt was talking about, the exceptions. So if we've gone and created these miscellaneous fields, which you could do, but it's complicated. So let us do that for you. And then you can go tag your employees that fit that exemption. In this example, there was an employee who was termed for cause, so fired for cause. And you'll see that this schedule table 1 worksheet will actually show that person because you've notated it in the system appropriately. And then that 1.0, that FTE count is going to be added to your total. So that's why I want you to work with us and make sure we get everything in the system for you, because the report itself is going to give you everything that you need. So you've got box 1 and 2, box 3 here. So everything you need is in this report. Here's an example of table 2. Table 2 is the same as table 1. It's just the employees that are over 100,000 on average at any given time during the year. So these people here are table 2. They're going to help. This is going to help you fill out box 4 and 5 for the over 100,000 people. Okay, the next couple tabs are basically the options, and this is if you want to go see how it's being calculated, your FTE count's being calculated. You're going to see this is the one reference period that you have to choose from, February 15th through June 30th. And then you're going to have a tab for January and February of 2020. And the only reasons to even look at these is if you question the data that you're seeing in the summary, because the very first page is going to show you which one is more advantageous for you. And so that's the one you should use if you question it. So I'm going to give you an example. We have a client who I've talked to personally that has people that have billable hours, and there are several employees who ask for a reduction in billable hour or a reduction in hours. So their head count their FTE count was way off until we were able to make these exemption changes. So once you go in and make those exemption changes for those employees that actually requested a reduction in hours, then that's going to fix your FTE count. So make sure you're doing that. But the only reason to even look at these tabs is to see where they're getting the numbers from. One piece that I did not include in here, there is also a tab for seasonal. So if you are a seasonal employer and you've put in your seasonal dates, you'll also see the tab filled out for the seasonal dates as well. And you'll see where they're coming up with this information to determine which one's better for you. The next two are really just a couple that will allow you to see where the numbers are coming from. So we're hoping, I don't know, 50, 60, 70% of you won't really have to even look at these, that you're going to be able to get the majority of your answers in the Schedule A, the worksheets 1 and 2. But if you've got an FTE issue, then you're going to have to drill down into some of these, and it will tell you, like in this employee wage detail tab, it's telling you, so there are some excluded reasons. For instance, if an employee was terminated prior to the loan period, You're going to see a lot of different things here. There's an employee owner, so that person will be excluded. So you're going to be able to just drill down into more information if you're trying to figure out where the numbers are coming from. This is interesting. So this particular, the same one, employee wage detail, it is a very wide report. So make sure you scroll all the way over when you're looking at it. And it again goes through each person and how things are being calculated. And all the way over to the right is interesting. It shows your loan period average FTE count for that person, along with the comparison period that it's picked FTE count. So here's where you're going to be able to tell if there's somebody that looks off to you. So if you go in and you see that you've got a reduction in headcount or a wage reduction, these reports are where you're going to be able to get more information. The last tab is called the employee loan period detail, and this is just one person example. This will have every person that is in the company, and it's going to show you by payroll that's included in the loan period. It's going to show you the hours, the wages, and the information per employee, so that you'll be able to go by employee and see what is causing an issue. So I've seen in this case, I've looked through with some of our clients that I've helped, that you'll see, for example, if we didn't notate that someone had asked for a reduction in hours, you could see that their hours had greatly reduced. So it allows you to go say, hey, why is that person's hours reduced? We didn't have a problem with that, with laying that person off or reducing their hours. And then you go drill down and say, oh, this person requested a reduction in hours. Go back and make a change in the system, rerun the report. So those two reports are really to drill down if you have FTE or reduction in wage issues. And again, we'll help you go through those one-on-one because they're not super simple. But for the most part, you run this report, you're going to get everything you need, 95% of what you need. Now, one thing to note is if we're not running benefits through the system for you, it's not going to be included. So you're going to need to go get your benefits information, and you need to get your retirement information if we're not running that through the system. If we're doing benefit administration and we're including that in the system, you're using our Ben admin system, then your benefits will be included. Just make sure you're including those. If you don't run those through the system, go get the documentation you need and include that. This is kind of small, so everybody's gonna get an example, or you're gonna get a copy of this. So I apologize. I tried to include this. This is the actual example of the forgiveness report, the first page and the third page. The second page is where you agree to a bunch of stuff and you sign off and you put your initials. This first page and third page, or the first page is the actual forgiveness calculation, and you're going to be able to get all the data that you need from that report that I've just gone through. The third page is the Schedule A. So when you take that Schedule A that I showed you it's going to come out of the system, you can fill all this data in, and you can also fill in everything on the forgiveness application, page 1, with information that you have of this report, minus the benefits. If you don't run it through the system, you'll have to add that separately. And the other piece is, of course, your rent, mortgage, interest, utility payments. You'll have to add that in because obviously we don't have that data. But this is what it looks like. And when you get it, you'll get a copy of this, and you'll be able to go through the numbers. You'll see how I took the numbers from those reports and plopped them right in here. So last but not least, again, I just want to say that there are new changes coming this Friday. There are going to be a couple changes that are going to affect you, but we wanted to, in these town halls, sometimes we've tried to get information out fast, and sometimes it changes, but we would rather get it out to you because the people that I've talked to want to run these reports and at least see where they're at. So making sure, like if they need to make a change to FTE, they need to hire somebody back, or at least it will give you as much as you can use right now to see where you're at. And by this Friday, when the new release comes out, a few things will be resolved that should solve most of the problems to allow you to finish the application for forgiveness. But just wait for Friday for a couple of these changes, but you can start running it as soon as you get us that loan origination date. I have seen, and I'm gonna throw this out there because I'm working with a client now, and I have seen a case where the employee owners were not calculated correctly for the 8-week time period. So I think that is an issue with a couple cases. For the most part, I've run those perfectly and seen it happen correctly, but I have seen a couple cases. So make sure you check the owner compensation, and that should be resolved this Friday. Just make sure when you're looking at that summary A that the owner compensation is correct. And it's calculating for the 8-week time period or the 24-week time period. And as you know, the maximum is different for what the employee owners are able to pay themselves. And that is $15,385 or something like that for the 8-week time period. And it's capped at $20,833, I believe is the number for the 24-week time period. Just pay attention to that because I have seen an issue with that. Hopefully that will be resolved on Friday. So without further ado, I'm going to try to answer a couple of these questions, and Matt, I'm going to let you answer some too. But one question that I see in the chat is the 25% wage reduction is only for employees whose salary is less than 100,000 or is 100,000 or less. Is that correct? And yes, that is correct. Thank you for that question and clarification. People, they only care about people who make 100,000 or less when it comes to wage reduction. If you have someone over 100,000 and you reduce them 50%, nobody cares, apparently. So that's a good question. Now, this is a very good question as well. How can you apply for forgiveness when the FTE date is 12/31? Here's my answer to that, and this is not perfectly clear, but my answer to that right now is if you had no FTE reduction, then you don't have to wait for 12/31. If your FTE count has been restored or you never had a drop in FTE, you can apply whenever you want. If your FTE if your full-time equivalent employees have not been restored yet and you need more time, then you're just going to have to wait to apply for forgiveness. So I would hold off. You've got time. You've got 10 months. And I know a lot of people want to get this done. Everybody wants to get it done, and I totally understand that. I also know that a lot of the lenders are freaking out because they're going to be flooded with applications for forgiveness. So even if you get the application in, it could take a little while. The only reason that I think get it in fast is if you need it off your balance sheet and you know you're going to get 100% forgiven, or if you're able to get the use the easy form and your FTE count and wage reduction is in line to be able to do so. So that's my answer for that right now. That could change, but as of right now, that's what I would recommend.
And Lori, Lori, to add one other situation, unfortunately, I've heard this too, is one of the other reasons that people have been applying for this is just the general consensus of, this sometimes feels like a 2-month Band-Aid to a 12-month problem. And that some people are planning on going and applying for forgiveness. And then unfortunately, there may be a round of layoffs after that, their FTE count, because the customers are still not coming back or they can't self-sustain this. So some people have used either the 8-week period and trying to do this before they have to make some staff changes.
That's correct. Yes, you're right. If it looks like that the money is run out from the PPP and reduction in staff is going to happen again, then you may want to apply as quickly as possible. Mm-hmm. So, agree to that. Let's see. I'm going to read a couple of these. Our bank, which gave us the PPP, stated they're working on a forgiveness report for us, but is not available yet. Can we use your report, or do we need to complete theirs too? Okay, so I would think that the banks are creating the application, and you're going to have to follow whatever the lender is wanting. So they're supposed to create a very similar application for forgiveness that follows the SBA application exactly. But they will probably want some additional, they may want some additional reports, or they may want some additional items filled out. But you should be able to use this report to quickly fill that information out. Or they may be able to take, my thought process here is that the documentation that the banks are going to want, you may be able to provide this report for them in lieu of the reports they're wanting you to fill out. So that's something to talk to the lender about, but good question. Let's see. What happens if the 8-week period is over and you choose to apply for forgiveness using 8 weeks, but later need to reduce FTE count? So that was what Matt just talked about. And that should be fine as of now. So if it looks like later you have to reduce FTE count and you know that could be potentially be coming and you've already used the money, then I would apply for forgiveness ASAP, and then you should be okay. Now, again, there's a caveat here. The SBA has, there have been changes made, as we know, to the legislation, and things change ongoing. A few things that I've said in the past turned out to be absolutely incorrect because they made a change to it after the fact. So there's always room for this to change, but as of right now, then you should be fine. 1099 contractors should not be included in any of this because the 1099s should have been able to apply for the PPP funding themselves. So in the reports that you will get, those 1099s will show up as 0 on the FTE count as well as the wages. So that should be totally pulled out in our system. It'll pull it out for you if they're shown as 1099s. Let's see. If your FTE count stays the same through the period of the loan with no changes, do you need to do anything to report a reduction in FTEs after forgiveness? As of right now, no. So that's a good situation. Get it done, get it applied, get it forgiven as soon as possible. And as long as you've kept that FTE count and it's okay within the time period that the loan is, then you should be fine there. As of right now, again, there's always room for changes, but as of right now, that's the case. Let's see. If we decide not to rehire a furloughed employee, however, we have hired the same headcount back, what do we need to do in regard to the furloughed person whom we are still clicking weekly on DOL unemployment? Well, so the furloughed employee, the FTE count, and I've looked at a lot of Q&A on this, the FTE count is going to be based on overall FTEs. So not if you let one person go and you hired another one, but your FTE count stays the same, you should be fine. I've had that question asked, and that's the interpretation that I've seen, that it's not employee for employee, but more likely it is, but it's the actual FTE count. So you've hired someone in their place or in replacing that person. You were down an employee, but you've gone back up an employee. And as long as you do it by the restoration date, you should be okay on that. Let's see. I hope that answered it. I know that that's not super clear, but my interpretation of that is that you should be fine as long as the FTE number stays the same. We have more hourly employees that only work on Sundays for church services. We haven't resumed services, so we are not paying hourly employees at this time. Our 40-hour full-time people have been kept on the entire time. This changed our FTE. So I think in that case, okay, churches are interesting because many of them have not been able to have their normal services, and those that were already doing a lot of online service, I think, have been in better shape. But I believe in this case, you're going to have an exemption for the business or the church, in this case, being shut down and not allowed to operate fully. So you'll see when we send this out, there's a page here talking about the exemption reasons. And one of the reasons is not being able to hire back people or restore hours due to CDC recommended guidelines or government shutdown, or companies not being able to be full back at it. So I think that churches in this case, and if they're in a state that they've been basically shut down, that they will have an exemption around that. Let us work directly with you though. and make sure that we can run these reports and help you with them.
And yeah, Lori, to your point too, that's what some of this exceptions are for. So it'd be a matter of tagging all of those employees or those hourly employees to make sure that they're reduced off the report.
Okay, thanks, Matt. This is a question that is confusing, and the application says payroll costs incurred but not paid during the last pay period of the covered period. What's going to happen is, depending on the time period that's picked, you could have, so like alternative covered period, you may start the covered period, the payroll begin date after the loan origination date. And so therefore it could go past the covered period. Our system is going to know that and going to prorate accordingly the payrolls, so the payroll dollars. So you should be okay on that. But if you're running the reports, once you have access to these, or if you already have and you're not seeing that happen correctly, just reach out. We'll help you with that. And I think that's all the questions I've seen. Matt, is there anything else that you can think of that you would want to talk about?
No, I think you pretty much hit it. What we'll plan on doing as far as communication, obviously it is very important that as soon as we get new information, we consume it, we simplify it, and we send it to you. So no difference with this report changes coming up on Friday. As soon as we get access to those developers. And the one thing that we want to assure you too is if anything else does change, or I know it's a little bit of a moving target, but if the SBA comes out with additional guidelines, please know our developers are going to turn around and get this report ready for you by the time you're applying for forgiveness. So just keep an eye out for your account managers. Please, please, please reach out to us. Do not feel like you have to stumble through this alone, and we'll help guide you through the complexity.
Hey, Matt, one question I just want to, I want to make sure everybody understands is, how do they get their loan origination date to us? What's the best way to do that?
Simply, so if you already know your account manager, just a quick email, just say, I'd like to go ahead and get access to the report, and just put in the subject of that email or on the line, just the date, and we'll take it from there. And then usually our team can probably turn that around in 20, 30 minutes and get that report available to you. Then if you'd like, just let us know if you'd like to schedule some time as well to say, hey, I'd love to schedule some time to walk through this together. Again, just let your account manager know. And if you're not sure who that is, you can just go to customercare@threadhcm.com and we will take care of it from there.
Awesome. Well, thank you so much, everybody, for your time. And after this, within the next, I guess, 24 hours, this recorded webinar with the slides will be made available to you guys. And I just, thank you guys for your business, number one, because you're all clients of ours, and we appreciate your business right now. And we just hope everybody's doing well out there and that the companies are starting to come back. So we're excited to help you guys through this and see 100% forgiveness for all of our clients. That's what we want to see. So thank you guys so much for your time, and we'll be talking soon as changes are made. Thank you.
Sure.